Good afternoon and welcome to today's webinar, which is titled Next Generation Financial Consolidation and AI-Infused GRC for Enterprises. This webinar is brought to you by Express Computer in partnership with IBM. I'm Mohit Rathod, Senior Correspondent with Express Computer. Technology enables finance executives and teams to handle core business functions while dealing with cybersecurity threats and the changing regulatory landscape. Now, given the potential for transformation, most times enterprises are steadily turning to AI-based solutions to overcome challenges such as changing regulations, traditional processes, and outdated infrastructure. With AI-based solutions, your teams can gain timely insights from help that can help reduce effort, manage risk, and enable proactive action. IBM Cognos Controller, along with IBM Open Pages with Watson, gives you the ability to handle core functions while maintaining governance and compliance. IBM Cognos Controller helps automate and accelerate financial close and deliver relevant reports for stakeholders. And all this while maintain IBM Open Pages with Watson helps eliminate manual processes and provides timely insights for risk and compliance professionals. So before we go ahead with today's webinar, I will quickly give out some of the information regarding this webinar. This webinar is being broadcasted live and will be available as on demand. We will have a round of Q&A at the end of the webinar. However, I urge you to send your questions anytime during the webinar using the questions text box. We will also have a short survey at the end of the webinar. A form will open in the web browser after the webinar ends. So I request each one of you to participate in the same, as your feedback is very important for us. If you face any technical issues, please try to refresh your web browser or else reach out to our team using the same questions text box. Well, if you have any further questions or if you wish to interact with the speakers, please leave a comment using the questions text box and the IBM team will contact you post the webinar. So that's all from my side now. Without taking much of your time, I invite our speakers for the day, who are Pradeep Iyer, Segment Leader, AI IBM India South Asia, and Atul Joshi, Technical Architect, IBM India South Asia. So I first invite Pradeep to set the context. Pradeep, the floor is all yours.
Hey, thanks, Mohit. A very warm good afternoon to everyone. It's been a delight to be here. And as Mohit was just mentioning, it's been a very great experience for all of us to be in this new normal. And I just wish that every one of you are safe. And we all have been learning for the last few months to deal with this situation. And we've been running several of series of these programs. And we have Atul with us, who's been with IBM for the last 2 decades, and he specializes, having worked with several kinds in understanding the world of finance and how we've been able to help them bring in AI in each of the finance function. And this is going to be another learning experience for us, especially because we've had some very good interactions with companies having turnover about 1,000 to 5,000 crores in the recent times. And with the changes in which the business operations are today, and the demands of be it regulatory compliance or even intercompany financial needs, there has been a lot of discussion as to how technology can be an enabler to automate these things, and also bring in a lot of experience that Atul will share with us in the next few minutes. And I'm sure it will be worth your time, and we look forward to hear more from Atul. Over to you, Atul. Thank you so much.
Hey, thank you, Pradeep. And good afternoon, everybody. And I hope everybody is safe and healthy. Right. So let me begin with what everybody is talking about in today's world. And I hope the screen is visible, right, Pradeep?
Yes, Atul. We able to see the screen well.
Thank you. And, be it whatever, context or subject, every company wants to adopt AI, right? Artificial intelligence, machine learning, whatnot. And what we found is, there are certain steps before you actually start this journey. And it always starts with challenges in terms of data, how to collect data, not just your internal data, but also the data that is available, outside the world, whether it's social media data, your customer data, or whatever, in terms of the behavior profile and stuff like that. The next step is in terms of, organizing that data, and then you start doing the analysis, having the analytics models in place. And finally, you start adopting the culture of infusing that analytics. And that's where we are. I mean, you hear about, IBM having, cutting edge technologies, tools, solution. So we, Pradeep and I, we are both included. We are part of something called Infuse stack within these set of products. And that's what precisely we are going to cover today, both in terms of the financial consolidation, and towards the end, we'll also talk about how the financial consolidation is linked to your GRC requirement and the solution around that. Right. Now, when we talk about financial consolidation, what you see on the screen is, I think it's like preaching to the choir. Obviously, everybody is so busy, especially the finance guys. You have month ends and quarter ends and year ends. On top of that, the managements asking for a lot of information. The regulatory changes. You have to do external reporting and whatnot, and things constantly keep changing. GST, this and that. So really, no time to prepare. And the thing is, despite you want to do the control over the process, especially it becomes very challenging if you don't have those nuts and bolts in order, right? So some misses are there, something gets missed, and again you are back to square one, and you have to do a lot of free work and stuff like that. So that's a part about missing the control aspect. And then the end result is, with all these manual challenges in all these processes, typically the users of this information tend to lose the confidence in the data, right? Because you don't know what has happened. There might be some manual process, manual errors that have creeped in, and this leads to a lot of inefficiency, right? So our objective is to do two things primarily. One is to do the automation, the second is to do the streamlining, right? And then giving the business user more time to do the analysis, which is what is expected from him, right? So with this, we have a short poll question, and the team, if you could just start the poll.
Yeah, so we have a first poll question here. Do you follow manual process for financial consolidations or using spreadsheets? The options are in front of you, yes or no. So the audience, you have about 30 seconds to answer this poll. So I urge everyone to send in their responses. I'll repeat the questions. Do you follow manual process for financial consolidation using spreadsheets? So let's wait for the audience to send their responses. Okay, we have our results here. So 66% of the audience say that yes, they use manual process. So Atul, what are your thoughts on this?
Right. So, it's quite natural that we've seen even the rest of the 30 odd percent. There is always scope to improve, right? I mean, there are some parts of the process that we improve, and then the constant changes in terms of the demand from the management and the external report authorities that ask questions around these financial information reporting. It always leaves some amount of some room of improvement where you can bring in these solutions, right? So I'm quite impressed with the results of the poll. So let's go to the next one. So what we have come out to tackle this is with IBM Cognos Controller, which is our financial consolidation solution. It caters to the need of the organization which have multiple subsidiaries, associate JVs within the group structure, right? And in today's world, we see cutthroat competition. There are acquisitions happening, and many a times it happens that you need to report on multiple gaps. You have, Indian gaps, US gap, IFRS, and whatnot, right? We also see that, the organizations are adopting these technologies faster, right? So if people are asking about the flexibility, how to get started very quickly, whether you have a cloud solution or, sometimes there is a challenge, this being a financial, sort of data. There are companies who would want to have this solution on premise. So we give both the flexibility in terms of how do you start using the solution. We know that the finance user are great users of Excel. So while we have a wonderful web experience for them, we are not taking away the power of, Excel. They have the Excel and they can continue to use Excel as an enabler for the solution. And then we have deep consolidation functions, right? So this is actually used across the world. And we have some of the regions, like in Europe region, you have many multiple companies, multiple countries, and a lot of stringent, guidelines in terms of having the process in place. Or it could be ASEAN as a region, and obviously we have India, where we are adopting the best of the best practices. The changes are happening. Some of you who are, from the accounting background, are quite well aware of that. We are adopting to the best ones. So we help across all these aspects, not just, from a technical and product perspective, but also in terms of giving you the best of breed that is available, right? Now, if you look at the cycle of, a typical close consolidate process, you start with the data collection. And I'm sure that, most of you have some sort of ERP in place. However, it happens a lot of time that maybe there are some newer companies who may not have an ERP. Maybe they have a Tally, right? Or some of the smaller companies which you have recently acquired is a startup, right? So how do you then infuse this culture of having the data streamed into your consolidation solution? So we worked across that. So it agnostic to any ERP, we can have the data, the base data getting collected into the financial consolidation solution, right? A lot of times you may not have the account code in case there are some custom ERP use. We provide the mapping functionality. So you have your common chart of accounts mapped to the individual chart of accounts of the subsidiaries. And in addition to your typical P&L, balance sheet, cash flow, and stuff like that, you can have actually the entire set of schedules or forms, which are included as a part of financial reporting. Right. The next thing is in terms of the core consolidation process, and obviously, the challenges is in terms of having all those currency translation, complex ownership, calculating the minority interest, intercompany elimination. So all these processes are well defined within our solution, right? And it's all menu driven. It's all finance owned. There is no coding involved. So a finance professional can actually understand how to start, using the application quite quickly. In fact, one of our, recent customer, they had some of the fresh chartered accountants who had joined their organization. They picked this tool in flat 3 months. So now they are the champ of consolidation within their organization. As I said, once the consolidation is there, then you do a lot of additional reconciliation between multiple gaps. There are some adjustment, notes to accounts, disclosures, all those things that you need to take into account, do the analysis and present it to the management, because at the end of the day, they are going to actually sign it. Enough internal control exists. That's what they are going to actually sign. And, there are processes around that they would need to vouch for. So all these things are, getting taken care of here, right? And finally, how do you report and analyze? And when I say report and analyze, not just, coming out with a huge list of schedules for external reporting, but we also support management reporting. Sometimes the legal entity structure is not exactly the same as the management needs are, right? So you can have a management structure and a legal structure both within our consolidation solution, so that you can cater to the need of management reporting and financial reporting from the statutory or external perspective, have the reconciliation between both of those, and give the best fact-based reports. Some of the things I already talked about, what are the differentiators, the key being, this is the solution for the finance. You don't really need highly scaled programmer kind of resource to actually implement and start using this solution. It's all application based. So with this, I have another poll question. Team, I would request you to start the polling process.
Okay, so we have a second poll question here. In your organization, which of these financial consolidation areas are time consuming and have a scope for improvement? So your options are intercompany elimination, currency translation, multi-gap reporting, and preparation of schedules for financial reporting. So again, you have about 30 seconds to answer this question. I urge everyone to send in their responses.
It's actually quite interesting, right? I mean, all of these are, very important things. Probably you can vote based on the priority. What is the most challenging out of these? What is the burning need out of all these, different processes?
Okay, so we have our results here. So 22% of the audience say intercompany elimination, 12% say currency translation, while 17% of the audience say multi-gap reporting, and while we have 49% of the audience saying preparation of schedules for financial reporting. So Atul, your thoughts on this?
Yeah, and again, this kind of brings us back. While we know how some of those things work, you have already probably built some macros and stuff like that to do intercompany elimination, currency translation, so on and so forth. But the whole activity is very time consuming, and that's what we are precisely, trying to address. That you do the streamlining automation first, and then focus more on the analysis. So great feedback. Thank you. Right. So, to kind of summarize, how do we stand in terms of competitiveness? Some of the things I've already captured in terms of, more power to the business user. But in addition to that, you can actually see that you have a flexibility, whether you talk about using the solution, so you use the Excel or you use web, or, doing more from the solution once the consolidation as a process is done, do bit of visual analysis and reporting, because that's the sacrosanct actual performance numbers that you are going to use. And all of this is backed by a powerful consolidation engine that you can use. And obviously, from an IT perspective, a robust platform which you can, adopt based on your needs, whether on premise or, on cloud. Both the options are possible. And again, this is the solution that you can actually start using as a, as a very low entry point. I'm not saying that it's cheap, but I'm saying that you have a need, it can definitely be worked out. You would be surprised to notice that some of our customers who actually went for this solution, I asked them a question because they were having just 5 to 7 subsidiaries. Everything was done in Excel. They were not really spending a lot of time. Their answer was that although we don't have a lot of companies and we don't really spend a lot of time in this process, we want to have the control in place, right? We want to have a solution that gives us the confidence that there is an internal a sort of control exists, and that's what auditor really loves when he gives those remarks. Some of the feedback from our customer. But what I really like about this is not just the time saving part, but also the involvement of the senior management, right? So when you have a financial consolidation solution, the obviously the team also is quite confident about how the consolidation is done. It's all a standard process. The confidence in data grows, right? So that's what really is key. Again, a brief survey, and based on that, what we have noted is, those who really have a process which is streamlined, they actually spend more time on the analysis, right? So they provide a quality time doing the quality work. So with this, what I'll be doing is I'll walk you through a brief demo of the solution. Now, due to challenges in these virtual webinars, sometimes there is a network issues and things like that. What we have done is we have created a story, as a video, but at the same time I'll be talking over it. I'll be pausing and playing the video, giving my own sort of thoughts and inputs on that. So let me switch the screen to the demo. I hope you are able to see my screen.
Yes, it is visible.
Yes.
Right. So we'll be starting with the workflow. So you log into the solution. So essentially the IBM Cognos Controller workflow is a web-based interface that gives the different companies within the organization to submit their data. When they submit the data, they look at various validations. They can look at where they stand in terms of the consolidation process, sort of cockpit view for the corporate team to give really a confidence that where they are in terms of various stages, right? So you log in with the set of your projects. So once I log in, I have different periods for which I can do the consolidation. Typically the consolidation is done quarterly or yearly, but if you want to do monthly, even that is fine. Um, at the solution level, you can even have a weekly consolidation, but obviously that's too much. I think nobody, I guess, does the weekly consolidation, right? Now, while we talk primarily on the legal consolidation, we can also do the consolidation for some of the units within the organization. So that's also included, right? Because a lot of times you have these legal companies which are manufacturing and they have multiple plants, etc. Right. So here you get a list of companies that you see. And just for the sake of simplicity, we have a parent company, and then we have companies with various ownership percentages, and we also have a subgroup, right? So you can have a complete group structure of your own, which can be set up in the tool, right? uh, you can have this whole list of companies, and in addition to that, you can see some of the other details, such as you have your reporting status, for example. So all these companies, where they stand, are they in terms of processing the data submission, is the reconciliation done? Some of the companies that you can see is showing ready, or it could also be missing when the data is not yet submitted. And then all of this is across multiple submissions. So you can actually define that the entire process split into multiple submissions. Probably when I talk about different submission, the way you can look at it is the initial submission will have certain forms or schedules, some of the key schedules. For example, submission one, if I scroll through the submission one, I have balance sheet, I have cash flows, and I have movement of equity, or I could have fixed asset movement, P&L and segment wise P&L, etc., so on and so forth. And in the next submission, you can include some of the additional details. So you have all those list of schedules with notes to accounts and some of the information, general information, or some of the financial instruments related information, whatnot. Again, this is not just limited, we can actually adopt to your practice of having all these schedules included here, right? So that kind of gives you a quick overview of where we are now. What we are going to do is we'll take an example here. So consider that some of the companies are still unlocked. Probably only company D has submitted the data. So we'll not look at the company D, but we'll use another company. So we look at the data submission by this company. You can import the data directly at a click of a button, or you can also input the data. We can also connect to your ERPs and import the data as well, right? So here, for example, you see you have 8 list of schedules. The key schedules are included: balance sheet, P&L, cash flow, the movement of these accounts, etc., right? And then you also have a status as to whether it is reported or missing. Missing means there is no data yet, right? And then you have this sample around balance sheet. Again, we can actually configure as the exact replica of what you follow, your account code, your descriptions, or if you want to include last year, last quarter, and multiple columns, even that is possible. You can optionally add the comments, or if you want to drill down into some of the details, like investment in subsidiaries. So this is a parent company. I get into the details of this, and what you notice is you have the list of subsidiaries within this, and across the group, with their ownership percentage, when the transaction happened. Sometimes the ownership is also determined by the voting percentage, right? So that voting percentage is there, at what price this was booked, or some of the other details which are not there on the screen, but you can have goodwill and capital reserve detail, etc., etc. Right? So all of that information can be taken into account. Now, what you see on top is one is your submission of these forms, and secondly, how do you validate and control that? Let's say intercompany elimination. Now, this company has had certain transactions with the some of the other company in the group, company C, and you can notice that what sort of transaction it was, what currency and amount it was involved, and clearly there is a difference. So this company recorded 100 euros, whereas the other counterparty recorded 60. So there is a difference of 40. Now, as a process, there will be a reconciliation happening, or maybe a telephonic conversation as to where the mistake is. But the key thing is, how do you actually rectify that? I'm not going to submit this unless everything is green. These 4 boxes that you see, whether in terms of form submission, intercompany difference, journals, or the other reconciliation issue that we'll see in a while, right? So let's go back here. Let's understand that we'll need to check what is the detail for the counter company C. In this example, I have assumed that probably the changes need to be done at company C level, right? So this is where I'll go back. I look at my intercompany details. Again, here you see the other mirror version of that. So I have 60 in my books of accounts, and the other counter company, which is A, is showing 100, right? Now, the next thing that I would be doing is I'm going to make changes. I've noticed that it was a P&L item. So I scroll down, go to P&L. I'll select the intercompany account. And once I select that, I will get a detailed form. So here I'll go back. I'll make the changes, all these different details about the intercompany transaction that has happened. So in this case, since I'm assuming that there was an error, so I'll rectify that error. I'll pass on the entry. I'll make it 100. I can optionally include some of the remarks. Sometimes if you have some PDF invoice or some of the things that were causing the reconciliation issues, I can use those attachment as well, right? So with this, I made the changes, and then I'm going to save the data. Now, the moment I save data, on top, you notice that those highlights have disappeared. There is no issue as such with respect to reconciliation for C. Even if I go to the company A, I can see that in my intercompany now, I don't have any challenges. The difference has gone, right? So this is how I sort of work on this, and try to bring in the validation aspect of it, right? Now, the other thing that we'll see is on the how the submission actually happens. So I'll take another case here. So earlier we had seen the intercompany elimination as a case where people collaborate and work on the differences. Now, in this particular case, we'll have a different scenario, right? So we look at the submit screen and notice that there is some reconciliation issues. So on the right hand side, there are some issues that have been identified, which I'll go and try and tackle. So I'll go to the reconciliation stage here. So there it may happen that within some of those forms the numbers may not match, or sometimes due to some errors there is a classic debit credit imbalance that happens. So I can notice that first type of error is I need to work on the debit credit imbalance. Secondly, this is very critical, right? So we have different forms, as you had seen earlier. So I have one form which is balance sheet, the other one which has the movement of fixed asset. And I noticed that in the movement of fixed asset, against a specific account, these numbers are not matching, which is reflected. Now, this could mean multiple things, right? This may happen, let's say, in terms of P&L versus segmental revenue. Those numbers need to match, or the detailed schedules on cash and bank versus what is mentioned in the balance sheet and stuff like that, so on and so forth. So you can actually have those controls established across all the forms which you would work on, right? So what I'll do is, in this particular case, first I'll try and tackle, remove this difference. So I'll go to one of these forms. So what I'm assuming as of now is, there is a difference between these two forms, and I'm assuming that the fixed asset movement is correct. So I'm not going to touch the 135, but I'll go to the balance sheet, and in my balance sheet, I'm going to make the changes, right? So I'll go to my a particular account in the balance sheet. I've identified that as this particular account. I'll make these changes here. Now, again, I mean, this really depends on what process you follow. Sometimes what people prefer is they make the changes at the back end in the ERP, reload the data, or reload the trial balances into the solution itself, and then the reconciliation issue goes away, right? So as you have noticed, we have tackled one type of issue. Now let's take a look at the other one. So here again, I'm just going to use a simple one of the liabilities account and make the adjustment for the remaining balances. So I can go to the balance sheet. I'll just probably search for one of these account. Let's say provisions or something. Okay, we have provisions here. And here I'm going to adjust these numbers. Again, you see these journals on top. The way to do this would also to pass, some of the rectification journals, or, make the changes in the ERP itself, load it back. But just to set the, sort of context, I've made the adjustment here. I notice that, everything is done green. So I confirm my submission. It says that once you do that, the submission will be ready and the company will be locked. So there was a lock icon as well as the status icon, which turned to ready that you had seen earlier, right? So we move back, and now we notice that, both these companies are, showing ready. Now, as a process, I'll go and, do the same thing for the rest of the companies. I'll try and, work out the different, challenges I have in terms of validation. And then I can consolidate. I can consolidate at a group level or subgroup level, depending upon the choice. I can just start the entire consolidation process at once. The solution has the inbuilt intelligence to do that, right? Or I can do it at the subgroup level. Now, the other thing that I would like to show is, we have seen the, the control and, the validation. It's also very easy to do and manage the entire solution. So let me show you something under the hood. So we have this administrator or power user interface where he has all the, details in terms of, multiple masters, right? So you have your companies defined here, you have accounts, common chart of accounts, multiple dimensions in case that is something that you want to report on, different submissions and forms, right? So this is really an interface for the power users who would actually define and set up the consolidation as a process. So it's a one-time setup. So in this example, what we are going to do is, we just have these companies. We are going to add a new company, right? What I'll do is, I'll add this to a subgroup. So I click on this new company icon, and we have just, some of those names. Let me, for the sake of simplicity, call it F, or subsidiary for subgroup. Let me give some description there. Along with description, I'll just put some short name as well. So let's call it sub SG or something like that. And this particular entity I'm going to define as a subsidiary. You can define also, use the ownership percentage, use the currency code. Yeah, that's what something I was missing. Again, this is a list of currency, not just limited to these two. You can have n number of currencies. Now I'll save that. Once the company is created, you can see it's already there as a part of the list. And now the next thing that I'm going to do is, I'm going to identify the parent of the company and ownership percentage. So I'll go and click there, select the group that it pertains to. So this is the subgroup that I'm going to use. And if needed, I can change the ownership percentage. Now with this, I'll just save this. And once I've saved that, now it's already there as a part of the group that you can see. Now I move back to my workflow. Now you notice this new company is there and it's showing a reporting status missing. Why? Because we have not started yet loading the data. Once I start loading the data, automatically all the forms are available for this company to start entering those details, and then it will move from missing to reconcile and finally ready, depending upon the process I follow. So that is something I quickly wanted to show you in terms of some of the under the hood experience, how easy it is for the business user, the power users at the corporate level to take own control of the consolidation process. Let me show you a glimpse of reporting. Now there are two things. As I said, finance users love Excel. So we are not taking away Excel. We have within Excel, we have this, add-in, which is available. It's a controller add-in. And you use Excel to connect to the centralized, consolidation solution. You can use it for data entry, change the layout. Again, the good thing is you already have the Excel templates in most of the cases. So you can use the same Excel template, only change the links to the consolidation solution. So that way, you're really not spending a lot of time doing a lot of rework, right? So one of the things that you do here is, let's say I'm going to use the same template which I was using manually, maybe change some logo and stuff like that. And for these amounts, I'm going to link this amount directly to the controller. So we have these built-in formulae, as you can see, cc dot, let's say get value or put value, easily configurable, formula. So you just need to input details as to, if you're getting the value for the data, which period or which actuality or which company you are using this for. And the same Excel interface can be used either for data entry, loading the data, or it could also be used as a reporting interface, right? So you create the Excel based reports as well very quickly. So that's about Excel. Apart from Excel, we can also have very visually appealing web-based interface. So let's say a sample around that in terms of your final group level reporting. You can choose from the list of companies you have, parents, subsidiaries. And again, this is just a sample. You can have the entire columnar approach as well, where you have the initial submission, IFRS, US GAAP reconciliation item, final reported value, do a complete slice and dice, click through, understand, analyze. So all of these things are available to you as a business user. So once the sacrosanct process is over, once the financial consolidation is over, you go ahead with this, right? So this was a brief demo that we thought we'll show you. Now let me switch back to my presentation mode. Right. So after you have seen a quick demo, we have a last sort of poll question. So team, if you could use the poll now.
Okay, so we have our third and the last poll question here. How many legal entities are part of your group structure? So your options are up to 5, 5 to 20, or more than 20. So again, you have about 30 seconds to answer these questions. And I repeat the question, how many legal entities are part of your group structure? So let's wait for the results. Okay, so we have our result in front of us. 36% of the audience say that they have up to 5 legal entities. 32% of the audience say 5 to 20, while 32% of the audience say more than 20. So Atul, your thoughts on this?
Correct. So this is again, depends on the facts. It's actually a question based on facts, nothing to do with, what solution you have, what challenges you have, just a fact. But as I said, in the earlier example, even the companies that do not have lot of, subsidies as a part of group structure, still it makes sense to bring in the control in place and, have a solution around that, focus more time on the analysis. It really depends upon how do you look at this. Because typically a financial consolidation solution is not really looked at, in terms of just time that gets saved. Where there are a lot of qualitative aspects to that as well, right? So, just to kind of summarize, we've seen, the flexibility, the ease of use, and I'm aware. I mean, we couldn't show you in a brief, window of time all the complexities. Probably we can reach out to you on one-on-one. We can specifically have more detailed intercompany elimination, forex translation, minority interest, multi-gap reporting, and some of those nuances that we can talk about, right? And how do you actually, go beyond just the financial reporting, use that for a real analytics with our solution, right? Now, with this, let me also bring in another point as to, how this is relevant from the governance, risk, and control perspective. Of course, financial reporting is a key thing from that aspect, but how do you actually link that to, a GRC requirement, governance, risk, compliance requirement from an organization point of view? And that's where I'm just giving a glimpse of our solution called IBM Open Pages, which is powered by Watson Artificial Intelligence, helps you cover all the aspects of GRC across various areas in an organization. Just to give a glimpse of, for some of those guys who are new to GRC or may not have heard much about this, this is actually simple. If you take a look at, let's say there is a sample organization here, and we have the IT team looking at, different IT operations, projects, assets, and there are continuity plans across all the data centers and whatnot. You have the finance; they have their own processes, risk involved in that. Financial risk is one of the biggest risks. And then you look at the external authorities, the compliance needs, sometimes management needs the internal compliance. You have stringent policies to take care of that. Internal audit team, giving the confidence to the top management that enough control exists. And finally, the entire operational risk across the geography, across your customers, vendors. And then what you do is you put controls around that, right, and test that out. So in a way, if you look at it, it's all linked. So one finance process linked to dependencies on the IT, and then IT risk directly affecting the operations, especially in BFSI. And then how do you tackle those issues? What are the process to bring in the control? Regulate the processes. So this all boils down to a single problem. Percolating kind of upward, needing the control to be in place across the areas of risk. So not just one team, one department, one function, but really an enterprise level, view of your risk. What are the mitigation plans? What are the observations? How do you tackle those issues? How do you make your processes more robust to give a view of, your key risk indicators, for example, right? So all of this can be summed up in terms of these different modules we have. So let me just select the highlighter, right? So what we have seen is people can actually start with the enterprise level risk across all these aspects, or maybe sometimes you can start small. You start with your IT risk, or you give it to your internal audit, or a constantly changing regulatory compliance, right? It's quite evident, with the current situation ongoing. A lot of times there are restrictions on number of people who have to work from the office and whatnot. So to address these constantly evolving needs, you really need to have a solution in place. Now, while GRC is a subject, which is a complete different, and it demands its own kind of nitty-gritties. What we have done is, along with the framework to identify issues, map it with the control and risk. We've also given a lot of capabilities around that to do the advanced analytics with your risk data, or have all the relevant people, not just the risk specialists, but also those who identify the issues and use the Watson AI capabilities. Just use plain simple English, raise the issue in the system. The issue will be automatically identified by the Watson using the natural language classifier. So that way we are suggesting that a culture of risk GRC analysis spread across the organization. Of course, in terms of ease of use, you have seen it, ease of use coming in across our different application, whether it is financial consolidation, whether it is governance risk, uh, or it could even be your planning and budgeting as a process. And all of that is connected through a powerful, robust mechanism where you can ingest the data, which is lying around across multiple silos. So this kind of gives you a holistic view of how do you go to that end state from the governance, risk, and compliance perspective, right? So with this, we kind of would like to hear from you as well, and I will request team to start the Q&A session.
All right. So that was indeed an insightful presentation by you, Atul. So we can now take some of the questions from the audience. But before I take the questions, just a quick reminder that don't forget to fill in the feedback form after the webinar ends. So let's see what questions do we have now. Meanwhile, I also urge the audience to send in their questions if you haven't already. Now is the time. So let's check what questions do we have. Okay. So while the audience is sending the questions, we have our first question here. Our subsidiaries and holding companies use different ERP systems. How can Cognos Controller address this challenge during financial consolidation?
Right. So it's a very good question. I kind of briefly hinted at that in the initial stages. As you see, people go through different stages. It may or may not be possible that all the companies within the group structure have a same ERP. So we are agnostic to ERP. We have customers where they use SAP, Oracle, or even some of the custom ERPs or Tally and whatnot. What is really important is to have a group chart of account which is mapped with the individual subsidiaries chart of account if they are different. And this would be a one-time exercise that we do. Once this is done, wherever your data is, we can connect to the data and take the data into the financial consolidation solution to begin the consolidation process. Typically what we have seen is people take the trial balance level data and additionally some of the forms or additional inputs such as, let's say, related party disclosure or some of those data set which are not readily available. Yeah.
All right. Thanks, Atul, for that. I again urge the audience to send in the questions if you haven't already. Now is the time, so don't miss out on this opportunity. So let's wait for the questions now. Okay, so we can take our next question. We do not have a bandwidth for highly skilled programming resources to be devoted to this process. Can the solution be managed by finance professionals who may not have coding skills? So Atul, your take on this?
Right. So great question. In fact, if you had seen the ease of use in terms of how do you actually not just set up the not just use the application but also to set this up. And I'd given an example where some of those finance professional can actually own the solution. There is no coding that is needed to use this solution. So that's that. I mean, you can actually start with your existing team members. What is needed is in the first initial setup. We'll have the some of our business partners use a train the trainer concept. So while the project happens, they will also train the some of your power users or CHAM how to set up a company, how to make some of those changes, use a new schedule, how to run the consolidation process, and then they're on their own. So once it's in the first time it's implemented, for the second cycle of consolidation your team can do it on your own. So that's about it.
Okay, thank you once again. So we have our next question here. Uh, Mr. Vishnu Prasad Sahu is asking, we have our manufacturing units at different locations across the country. with different locational challenges with respect to compliances. Can you suggest how to tackle these issues?
Sure. So I suppose the question is more on the governance, risk, and compliance. Uh, I mean, I would probably answer this question from a generic point of view, and I would like to really have a one-on-one as a follow-up to understand the question in more details. But yes, if you look at the governance and compliance aspect, uh, typically an organization is is working on a framework of multiple laws, right? So there would be a regulatory framework, there would be a framework based on some of these industry association, and some of the internal controls as well. So the way we work on this is we can adapt to a customer framework, to have those policies in place, to have those compliances, controls set up as per the government, as per the customer preferences. So you can actually start with, let's say, only IT compliance or operational risk as a module, or maybe look at regulatory change management as a module. And I'm sure we can talk more in detail as a one-on-one, and get more insights on this.
Okay.
There is a question on the chat, if you can read out.
Hold on.
Yeah, so I think Shivram is asking, can you provide me the dashboard? Yeah, so we have your contact details. Our colleague will reach out to you, and we can provide you more content on that. Um in fact, on the presentation layer, or the visual analytics layer, we have a complete set of capability, and we don't really these days call this solution as business intelligence solution. We call it cognitive solution because there is a lot of AI also embedded in this, right? So yes, as a solution, you can have those dashboards and reports which are meant for a typical finance style of reporting. But going beyond that, if you want a specific dashboard or the analytical capability, we can cater to that as well.
All right. So we'll take our next question here. What is the time period it will take to implement on the chart of accounts from different applications for accounting for more than 20 entities and approx cost of the product?
Correct. So on the costing side, yes, we would love to get in touch with you one-on-one. And rest assured, while you have the IBM logo, we can definitely work out, based on your requirement, what could be the total cost of ownership. As I said, we have multiple options. You can use a cloud as, quick, onboarding, or you can have on-premise if there is a challenge putting the financial data beyond your firewalls. Typically on the timelines we have seen, what is needed is to have as a process, okay, your group chart of accounts mapped to your subsidiary chart of account, and that I'm sure you already have, because you are, even today you might be doing consolidation, although it is manual. Those are the clear indicators. First things first, we can use those and probably also recommend on the best practices. So once that is done, setting up the entire chart of accounts, having the group structure, creating different forms, that is an easier part comparatively. So most of our implementation we have seen getting rolled out from 3 to 6 months. That's the average cycle. It could even be less, but that's the range.
Okay, so I hope that answers your question. Uh, so we have our next question from Mr. Vijay Gupta. He's asking, can we integrate this software with our SAP?
Yes. Many of our customers, they use a variety of solution, whether it is SAP or Oracle. We can take the data from SAP.
Again, I hope this answers your question. So let's see if we have any more questions. Well, if you haven't sent your questions already, don't waste your time. Now is the time to send in the questions. We have a tool here who will answer it live. So there's one question in the chat. Will it call for any license? Okay, hold on. Can this be integrated with Microsoft Dynamics and Oracle 12 I?
Yeah, so we are agnostic to any ERP. We can take data from any ERP, uh, whatever vendor you have. And honestly, to tell you, unlike heavy duty data warehousing project, real time analytics project, uh, financial consolidation projects is where you have a batch, sort of batch upload, because what you are looking at is at the end of the day, the trial balances and some of those data sets, which are not that huge in terms of, some of the other data projects that you see today. So, taking data from the source system, transaction system shouldn't be a challenge at all for us.
Mhm. So, Atul, there's one question in the chat. I think, will it call for any licensing issue?
Uh, I think the context is on the ERP vendor licensing issue. So, I mean, I can't respond about that in this event. But as generic feedback is, typically those are the conditions placed by the individual vendor in terms of how the data gets used. But having said that, it's not just IBM, right? There are so many other competitor of ours also who are having this solution. And I'm sure, I mean, one of those ERP vendors would also be there. But it really depends on, what are the terms and conditions in the individual contracts, which needs the interpretation of how the license is used.
Okay. So I hope that answers. Anyway, you can anytime contact the IBM team post the webinar.
Yeah, just to clarify, if the question was on the how our product is licensed, it's actually quite easy. It is user-based license. You can define how many users across the subsidiaries and at the corporate are going to use it, and we can work out the licensing. So in terms of total cost to ownership, you are looking at a license cost and implementation cost. And again, the hardware won't be a big cost here because this is not I mean, compared to a huge data lake data warehousing kind of projects, you don't really need huge hardware. And if you go with the cloud, then even hardware is not needed because that's part of the subscription. So if you look at the total cost of ownership, these are the components for you.
Okay, so Mr. Vijay Gupta is asking if he can have one detailed understanding or demo on the software. So he has given his coordinates. So
Sure.
Vijay, the
We'll reach
IBM
out to
team
you.
will take it forward with you. So I think, yeah, we are done with the questions. We don't have any more questions. So that's all the time we have for today. I again thank Pradeep and Atul for sharing the insights. I'm sure there have been many takeaways for the audience. I also thank the audience for the interest and time and participating in this webinar. Also, please remember to send your responses in the feedback form post the webinar. The form will open in your web browser once the webinar ends. Thank you and have a great day.
Thanks. Thanks, everybody.